Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hello everyone, looking at natural gas here on all kinds of time frames, looking at NGZ 2016 natural gas futures on the daily. And we have a little bit of a bounce following through, higher lows and higher highs, but at this point there is the potential that it is just a bear flag, cooling off the RSI to the upside before temporary relief before heading down to lower lows. So we'll look at key support levels, the lows of each day, 3016, 2996, and then the low we saw of 2972. And we can zoom into the hourly time frame to see a nice, more clear channel. And these lines need to be adjusted. And looking at an uptrend support channel with the lows forming higher lows. And then also looking at an uptrend resistance line that the bulls keep butting their heads against and are trying to break out above. So it is higher lows and higher highs, but all things considered, with this big dump that we saw, we're not really making much movement to the upside. We're not really gaining much ground for the bulls. So the bears are still favored unless we can see the bulls need a key resistance break up here of 313.4. And then if we break that level, it will be a lot less likely that it is a bear flag on the daily time frame. So I'd say one more solid bull day to start next week, and Sunday and Monday, then that will be a negated pattern in terms of the daily time frame. But obviously the bulls still have tons of work to do to turn around the trend to favor the bulls to the upside. Here's the 4-hour chart. Bullish MACD cross was a nice indication that the bulls do have some further strength. And if we get above this resistance right here, the high of this bounce attempt of 316.7, should be some easy movement just because we dumped from essentially 330 down to 315. So there's not a ton of resistance in between those levels. So if the bulls can get up to that point, again, it will be unlikely that it is a bear flag on the daily time frame, and we will be looking for further bounce. But if we can't break those levels, we will be looking for a move back down towards $3 and potentially another leg to the downside. Looking at the weekly time frame on natural gas, it is holding key support. So you can see the higher low pattern being maintained here, and the most recent clear higher low was down at 301. And although we did dip below that this week, the bulls closed above that, so that support is still intact. And you could draw a horizontal line at the low of that week, and you can see the lower wick of this week bouncing off that level, holding that key support. And we are looking to see if the bulls can rally off of that level. $3 psychological support holding the back test. And we'll see if there's any follow through for the bulls. We have a key bearish MACD cross here on the weekly time frame. And if we do head back towards $3, we are going to see that follow through. And if we close a weekly chart below $3 here, we're heading back down towards 276. So that's a very key support for the bulls to hold in order to maintain the trend to the upside. And we need to see the bulls get back up over that 316 level in order to show strength in the short term. So I appreciate you watching. Very clear support levels on the hourly time frame to keep an eye on these higher lows. As soon as those higher lows break, we know the bears are strong and they are likely to take back over. So as long as the higher low hourly pattern is maintained, the bulls will maintain control in the short term, and we'll see how it plays out early next week. And now to peek in on UNG, essentially the same thing with the 2-day potential bear flag heading for further downside. We did close up at the highs, so that does show strength, but the 100-day moving average resistance rejected the price 2 days ago. It's rejecting the price again today at 836, and it was on decreasing bull volume, this move, so that's not convincing for the bulls. They need to see increasing volume and a move back towards the upside. The weekly time frame shows that support holding. We had the higher low pattern here. 821 was the low of that consolidation, and although we dipped below it, we held it. So essentially, it's all of the same price action that we're seeing on the natural gas, is just with different numbers, different levels here, and you guys is the same thing. 2-day decreasing bull volume bounce showing not a ton of confidence heading forward. Weekly time frame did hold that low and need to continue closing above that low to maintain the higher low pattern on the weekly. In terms of DGAS, potential for it to be a bull flag, big time breakout 2 days of consolidation on decreasing bear volume. That's normal, healthy consolidation, and we could be in for higher highs. Monday is a very important day for natural gas and these tickers. So I appreciate you watching, and I will see you on Monday.